Bitcoin could hit $100,000? Experts are buzzing about huge price predictions, BlackRock's big Bitcoin bet, and which altcoins to watch right now. But is this just hype, or is something big about to happen? In the latest video from Altcoin Daily, host Aaron Arnold chats with Scott Melker, host of the Wolf of All Streets podcast, about the current state of the crypto market. They discuss Bitcoin's recent surge, the impact of major financial players like BlackRock entering the crypto space, and the potential for an altcoin season. Melker believes Bitcoin is in a bull market, predicting it could reach mid-100K price levels this cycle, and he shares his high-conviction altcoin picks, including Ethereum, Solana, Sway, Aptos, and Say. He advises dollar cost averaging into Bitcoin as the best strategy for long-term gains. Melker highlights the impact of BlackRock CEO Larry Fink's public embrace of Bitcoin as a major catalyst for the current bull run, alongside increased institutional interest, particularly the influx of capital through Bitcoin spot ETFs. He anticipates continued but less volatile growth for Bitcoin as it becomes more institutionalized and expresses uncertainty about the traditional 4-year cycle model holding true. I find Melker's cautious optimism about the crypto market refreshing. His focus on established projects like Bitcoin and Ethereum, along with his acknowledgement of market uncertainties, seems more grounded than some of the hype-driven predictions we often hear. While his price predictions are ambitious, they're not outlandish, and his emphasis on dollar cost averaging reflects a long-term investment strategy that can mitigate risk in a volatile market. His point about institutional interest, especially with BlackRock's involvement, aligns with the trend of traditional finance increasingly recognizing the potential of digital assets. This cautious approach, coupled with his bullish outlook, presents a balanced perspective on the current crypto landscape. In the latest video from CryptoTra, Bitcoin's price action is analyzed in relation to the M2 money supply, suggesting a potential upward trend. The video discusses important trend lines on Bitcoin charts, breakthroughs of which historically lead to price increases. Ethereum is highlighted as being particularly bullish across various valuations. The host mentions their personal investment strategy, focusing on accumulating Ethereum spot positions on PNX and other exchanges. BlackRock's substantial purchases of Bitcoin and Ethereum, totaling $284 million and $73 million respectively, are also mentioned. Regarding altcoins, the host believes they typically outperform in later cycle stages and personally anticipates Ethereum reaching $4,000. The video concludes with general market analysis, mentioning upcoming talks between Trump and Xi Jinping and their potential market impact. While the correlation between the M2 money supply and Bitcoin's price has been observed in the past, it's important to remember that correlation doesn't equal causation. Other factors can significantly influence cryptocurrency prices. The mention of BlackRock's investments does add weight to the bullish sentiment, as institutional interest is often seen as a positive indicator. However, market conditions can change rapidly, and the ongoing regulatory scrutiny of cryptocurrencies could impact prices. It's also interesting that the host is focusing on Ethereum despite discussing the potential for a Bitcoin breakout. This suggests they see even greater potential in Ethereum in the current market cycle. Ultimately, the cryptocurrency market is known for its volatility, and any investment decision should be made with caution. In the latest video from Lark Davis, he explains why he's trading some of his Bitcoin for Ethereum. He believes Ethereum is undervalued against Bitcoin and expects the ETH-Bitcoin ratio to double, reaching 0.05. He points out the recent positive developments for ETH, like increased staking, institutional interest, and planned improvements to transaction throughput. He's targeting a 100% return on this trade, which he anticipates could take 6 to 18 months. He mentions his entry point for ETH was around $2,680 and that his target for ETH is $10,000, contingent on Bitcoin reaching $250,000. Lark's bullish outlook on ETH is interesting considering the increasing competition in the Layer 1 blockchain space. Recent news about projects migrating away from Ethereum due to high gas fees and the rise of alternative layer 1s like Solana could pose challenges to ETH's dominance. However, the continued institutional interest and the ongoing developments within the Ethereum ecosystem, particularly the progress towards ETH 2.0, do suggest potential for future growth. It will be interesting to see how this trade plays out in the long run. In the latest video from Ben Cowan, he discusses Bitcoin and the cryptocurrency market cap, which sits at $3.298 trillion, below the fair value of $3.878 trillion. He notes that this undervaluation is typical and primarily driven by Bitcoin's price movements. Ben compares this cycle to previous ones, pointing out that while the total market cap has previously surpassed the fair value, this cycle has been different due to macro uncertainty and tighter monetary policy. He suggests that a shift in monetary policy, such as ending quantitative tightening or lowering interest rates, could propel the market cap above the fair value. Ben predicts that the crypto market cap will eventually reach $10 trillion. Ben Cowan's analysis provides a thought-provoking perspective on the current state of the crypto market. His emphasis on the influence of macroeconomic factors and monetary policy aligns with recent discussions surrounding the correlation between traditional markets and digital assets. This makes his $10 trillion prediction quite interesting when we consider the current crypto market cap of $1.18 trillion, which is almost 9 times lower. This means a very optimistic and significant growth would need to happen to even consider this prediction feasible. Additionally, several factors such as regulatory clarity and technological advancements within the crypto space will likely greatly influence its future trajectory. While predicting the exact future of such a volatile market is impossible, exploring different scenarios and probabilities based on historical and ongoing trends is certainly insightful. In the latest video from Coin Bureau, Nick talks about the biggest risks to Bitcoin. He discusses the increase in Bitcoin-backed loans, both in centralized and decentralized finance. This leverage could boost the market, but also cause a crash if Bitcoin's price drops. He also points out the concentration risk, where a DeFi hack or a company like MicroStrategy being forced to sell its Bitcoin could trigger a sell-off. Nick then discusses the politicization of Bitcoin, especially with Trump's involvement, and how this could lead to international retaliation, such as China dumping its Bitcoin holdings. The concentration of Bitcoin mining in the US and the reliance on Chinese mining equipment are also highlighted as potential risks. Finally, the video touches upon the threat of quantum computers in the macro environment, emphasizing Bitcoin's potential to become a safe haven asset. $2 billion loans, a $1 billion loan, 200,000 Bitcoin. It's fascinating how Bitcoin's growing importance brings with it a whole new set of complex challenges. The discussion about Bitcoin as a safe haven asset versus a risk asset is particularly relevant given the current global economic uncertainty. While the potential for a quantum attack seems distant, the rapid advancements in technology warrant attention. The interplay of politics, finance, and technology in the Bitcoin space continues to be a compelling narrative.